Lauren Goodwin, as we said here as well, and you're concerned about the regional banks?
I am. The difference between what's happening in PacWest and some of the others is that these were foundationally good banks. And so there's a difference between idiosyncratic events and a slow-moving, slow-burning bank run. And really what that means for the economy and for the markets ahead is that the economic data, the way it's been evolving, it's going to start moving faster, right? And tightening credit conditions impact, with not as long of a lag as people think, employment. And so for investors, one of the things that I'm really thinking about is, yeah, maybe the next couple of days we sit range-bound waiting to see what happens. But there's some very clear markers of what would trip this market downwards. It's employment falling off. It's the Treasury General account falling off after the debt ceiling gets resolved, if that does happen here in the next couple of weeks, and it's earnings. If those are 3-4 months away, then volatility is actually a good thing for investors. So I think we wait a couple of days, see what's range-bound, and then move on.
I mean, it's no surprise when you see the turmoil in regional banks that, as Leisman was saying earlier, the probability now for a rate cut is 60% in July, right? So we've spent the time saying, well, the market's predicting a cut in September. Now it's creeping up and higher and higher and higher and closer and closer and closer.
I think what this says is that the market is getting more worried that something bad's actually going to happen.
Yeah.
The way I read a cut in September was not, oh, the Fed's going to cut 25 basis points in September or November or whatever it is, but instead that after, most people expecting the market to do, or the Fed to do pretty much what they've said they're going to do, stay put. Instead, the transition becomes, oh, there's a major event that's going to have the Fed cutting 100 basis points.
I'm going to act like I heard everything that you just said in that moment.
Just to that point, there's been, for example, some huge trades in VIX call options today, right? People betting on a huge spike in the VIX by, let's say, September, above 40. It doesn't mean in the market's collective wisdom it's saying we're going there. It's saying it looks like we have some of the ingredients for something to break further, and let me either put that on as a bet or put it on as a hedge. It's the same thing in the short-term Fed funds market, where it's like, look, the probabilities suggest you want to put some chips on a long shot here because maybe it's not as much of a long shot.
If there is a cut as early as July, do you see that as a positive or a negative? I asked Dubravko that same question, but how would you answer that?
Strong negative. Strong negative. That means if the Fed is cutting in July, it's not because inflation's under control and they see a sustainable economic picture ahead. It's because something is breaking, and it's breaking hard. And so I think we need to hope, actually, that the Fed does what it says it's going to do and stay pat, because the alternative is likely to be more of a risk-off moment.
Yeah, there's your 2-minute warning as we head towards the close. Again, Apple earnings are yet to come. Do you think, Lauren, that it was a mistake what the Fed did yesterday? Did you think they were going to go?
I thought they were going to go. I thought they could have held. The Fed is so focused on inflation. That's what they should be focused on. That is their mandate. We probably, with the tightening credit conditions that we're seeing, we probably could let this thing run its course at this point. But, with inflation not under control, a pause is not the same thing as a pivot, even today.
Yeah, it's been great having you here.